This is how it all looks like on M15. Again, look how the bodies perfectly touch, bounce, bounce, bounce. There is no some kind of straightforward disrespect to the senior order block, and that's very cool. If you notice that kind of order block, it's going to be very quality work. But again, that's about it. Yeah, you would, for example, there, or you know how to enter only from the order block, then you would hardly find anything interesting here. So let's go down to the bottom. This is the 5-minute time frame. Here the story is already more interesting. In principle, we could already enter here and find some more or less interesting entry points. This is the history we can see at M15. You will see that we have support at the bottom, liquidity at the top, and in principle, we can work on these points. But there is a more detailed approach. Again, there were order blocks here. They were immediately taken out at the opening of the American session on indices. It is an absolutely natural story, but here it was already possible to find them in principle. And this simple context of an older time frame, with the understanding of what the price is rebounding from and where it can potentially move, allows you to find such good points on M5. But let's go down to M1. These order blocks, which were qualitatively visible here on M5, I would most likely not enter. First of all, because this is not the time when I like to trade. And secondly, I would wait for the opening of the American session, but I want to draw your attention to this section. What was the order flow here? Here we had a liquidity withdrawal, then everyone was thrown out of the market, and the price started to believe a very high probability that you would not enter here. And this is absolutely normal. Do not rush after the price is running away. It is better to see a qualitative confirmation and form a hypothesis. This is our order block, which we saw on M15. It is already F, and this is how it looks on M1. And this is how it looks like on M1. I personally do this. I find confirmation of this hypothesis, that everything will work. I wait for the price touch. And I'm interested in further looking at the order flow. I'm not really interested in this whole structure because, well, first of all, there was no clear touch of the body of the order block. I need this. And in principle, I know that after an impulse movement, there is a pullback and such manipulative movements as if they draw some structure. But in fact, it is not a structure. I just prefer to wait it out. Yes, sometimes I miss trades, but again, what I am showing you is just an illustrative example. I have specific systems that give me a higher probability. I know exactly when to use it. I know exactly at what moment to enter by minutes, what I should see, what it should look like, but I will talk about that a little bit later. Again, I come back to the example, where it was cool to enter here. Here there was an incomprehensible structure, some kind of up and down, nothing to push back from. These order blocks, they are of poor quality. Let's say deep growth, then pullback, deep growth pullback, deep growth pullback. For me, it all speaks of manipulativeness. And after this movement, yes, these two candles, this is one order block. I prefer to act in the following way. It is not so that I saw some order block, and only from it I enter. I prefer to have a cluster of elements in one place in the smart manny. Look what is here. Here we have an order block, which was seen on M5. This is how you can see it on M1. There's a gap here. And in this whole formation, in principle, that it would be good to go in, I see here one more breakdown of the structure, which breaks through this structure and breaks through this structure. Everything, it is kind of obvious to me that the price is going to move further. Where to? Well, to the liquidity that we noted. We'll come back to it now. And in all of this, I see an order block right here. I can basically enter here. I can enter here with stop loss. It will not be the best deal here, but further, I can enter by order flow because I understand that it makes no sense for the price to go back lower. There are so many different obstacles here. Order block, the gap was closed, liquidity was taken off here. There is order block. The structure was broken through, and then it was rolled back to order block. And when there is such a cluster of elements, that's why there are such high probability entries on M1 from order flow, because I am sure that the price will not return lower. That's the most basic thing. Well, if there are such stories, when the price moves back and forth and takes out everyone, naturally at such moments I do not enter by any order flow. But when there are such obvious pools of liquidity, and when there is such a set of order flow elements, you can enter more jewel-like and not be afraid of being taken out. Once again, friends, back to the point. If you want to enter very high probability deals and find confirmation on smaller time frames, then you need a multi-timeframe analysis. You start with a daily or even a weekly one, then move to a daily, hourly one, and form a hypothesis. There. Not just a hypothesis, no, you wait, you mark out reference points, which, if the price comes there, will be of very high quality and very high probability. These are the points where your attention should be maximized. And then, when you have determined where, to what liquidity the price will move, and where the reaction came from, where the price pushed back, you can find such additional deals, which, again, with multiple confirmation. Order block, gap, structure breakdown, another order block. And in the course of this movement, you can always find 1, 2, 3 entry points, calmly, very easily, and with a very high probability. But for this, you need to understand what is happening and form the context of this liquidity. We had the main one. Here there was a breakthrough of the structure. The price hit the order block again, went higher, rolled back, came out again. And here on this movement I would already enter. Well, sometimes the price goes without me, so you should not be afraid to enter. Plus there was an inverted gap here. I realized that price is not going to move lower there. Something to manipulate further somehow. I can see that it just broke through that gap. Everything now, I understand that even if the price did not return to it, it means that most likely it is waiting now for a fast, energetic, impulsive movement. And you can always find a quality entry point. Here the price did not reach our liquidity. In principle, I would fix the profit in parts. And here again the price rolled back into the gap and rebounded higher. Here we also have a block order, which was at 5 minutes. Here we have an inverted gap, then the price again rolled back into the gap and broke above the structure and consolidated above this gap. Well, this liquidity, of course, was the first. There were several more pools of liquidity above, but it is the most obvious one. In order to enter here, it is necessary either to be very brave or to understand that the price will go further. Ideally, you should enter at least from these points, or even from somewhere else from a greater depth. I am just showing you that these movements are not random. They are not chaotic. They have a certain structure called order flow. Now, the most interesting and most important thing that you should remember is that this whole structure should once again support the idea of where the price will move next. Well, for this you need a certain flexibility of mind. Not always you will determine everything correctly. And when you realize that you have made a mistake, these are the breakdowns of the structure, respecting these order blocks. Respecting the gaps should tell you that you should discard the idea that you have, for example, marked a gap here, and think that, shit, now the price will come into it, and probably it will fall lower, because there was a breakdown here. But here, when the price broke through the upward structure here with this movement and rolled back and hit another gap, which eventually became inverted. Here the price finds support, and look how the price fixes itself inside this gap and starts to move further. Here we could safely assume that the price will move further. Then this turned into an inverted gap, your original hypothesis. Does not confirm, for example, a downward movement if you wanted to short here, but instead it confirms the upward movement. And instead of clinging like a sheep to your unrealized hypothesis, there pulling your stop loss in the hope that you will be right, it is better to quickly admit your mistake, reclose the trade, and re-enter the market. You will have a huge number of opportunities, at least to recoup your losses, and at most to make a good profit. It is absolutely normal story when you made a mistake, paid with your stop loss to understand the true intention of the market, immediately discarded your inadequate ideas, and began to follow the market. It is absolutely normal practice. It happens to every trader, but for this, you need flexibility. And now, friends, I want to show you ready working sets. Summarize it all up, how you can use everything I've told you in real time, and what the sequence is. Basically, I've been talking about all of this throughout the video, but now I want to just elaborate on it a little bit more. What exactly do you need? You need two elements. The first element is some kind of base, either a foundation or a wall. Yes, for example, if we have this downward movement, you need some kind of wall above that price can't pass. What could that price be? It can be either an order block, it can be either a breaker, it can be a liquidity withdrawal. When liquidity has been withdrawn above and there is no point in going up anymore, all the work has been done above. This is a certain starting point, after which the price will move further. Moving on to where, the price will move either for liquidity or to close the gap, and this is all you work in. You need to see a quality foundation. First of all, you do not need to trade during consolidation if you see yes before the section. Here there was a downward movement, then there was some time consolidated movement, and there was an upward movement. I can trade absolutely everything. I have fun trading it, and there are a lot of cool trades. And up you can trade it all for combined. And on scalper trades and on M15 trades, well, absolutely huge. I have absolutely no worries at all about missing out on deals. There are a lot of them, but I recommend you to focus on impulsive movements. And impulsive movements are very often formed after consolidation, when the consolidation boundaries are broken. Next, you need to see some kind of foundation. You see this foundation on H1. I will not touch the weekly time frame. I will write it down in the next video. But here are more or less uncomplicated, but working sets. You find some confirmation on H1. The H1 time frame is very significant within the day. So if you see any order blocks, or again the same gaps or liquidity withdrawals or breakers, that's what you need. You need to wait for a quality base first. Then you need to look potentially where the price can move from this base. You need to place potential pools of liquidity. There is a pool of liquidity right here. There is a pool of liquidity right here. There is a gap right here and right here. Specifically here, we have the foundation right here, right here. We have an order block and we have a gap right here on M15. We have two pools of liquidity and we have a gap as we go along. It is interesting not to look for this already departing somewhere, but to find some points from which there will be movement again. Let's go to M15. Here, in fact, is our block order, and there is a gap here. We are interested to see what kind of reaction the price will give to these points. And when it touches here and breaks through the structure here, we need something additional, which will tell us about further market movement. Here we have already broken through the structure. This candle has already broken through the structure here. In addition, this liquidity, and this is at least the first target. And above this. Now, we'll see everything. And please pay your attention to the gap that I noted on H1. This is how it reacted. And here we also had a block order. This is your flow order, only we are looking at it now. On M15, you can again enter here from the gap or from this block order. But the main goal is the base and the liquidity pool. I prefer to enter on smaller time frames and see where I can find better entry points with additional confirmations. We had the first withdrawal of liquidity. Liquidity was withdrawn, and we immediately marked differential points where the price could potentially correct. It could correct to this order block, but it touched this order block. It was not very clear here. And here again, it broke through the market structure. This top was broken. In addition, there is an inverted gap here, which was overlapped, and now it acts as a support. There is also an order block here. In one place, there is a huge accumulation of potential smart man eye points, which give further support for moving higher, but already on M1, and again, here are our first liquidity pools, which could be entered, taking into account the fact that the structure was already broken. Here we fought off the order block, the gap. It was all on the hourly time frame, on M15. Here we find the same picture, only on M1. We could already enter here. The first two liquidity pools were removed. And after that, there was consolidation. As soon as we are interested to enter in the liquidity hike, as soon as the liquidity was removed, we should wait for the development of events, how it will all be formed. After that, the price withdrew the first pool of liquidity, which we were interested in, and here the price came to the gap and started consolidating. After such an explosive movement, which was before, this whole structure is not of any particular interest. Plus, you need to understand what sessions to work in and so on and so forth. But it was interesting for me to see that the price touched this order block, which was on M15, and to look at the reaction of the inverted gap. Here, when it all happened, and here was a quality entry point. Well, again, it all has to be understood for some time, but you already have a certain understanding. It may seem to you now just some random set, but I know exactly what time to trade minute by minute, not just like an hour, but by minutes, when to enter it, what I should, when to see. And this is where after multiple touches, and this is where the order block touch, I see a breakout of the structure here. You work with the basic elements of smart money, which is finding where price finds support or resistance and going after liquidity. We have the same story here. We have a breakthrough of the structure, a pullback to the gap, then another movement. Another order block also fits here. We have seen this consolidated movement here all the time. We took out everyone at the top, then we took them out at the bottom. And further, we are already looking at a specific time. And what is the price to draw us here in principle? And here it was possible to enter steeply. Again, it was possible to enter here. And all this is a matter of following the liquidity. In principle, I would have already exited here within the day, but if we hold a little bit longer, we could reach the target liquidity. And there are many such examples. Your task is to find multiple confirmation on different time frames, hypothesis on the senior time frame. Then you move to M15 again. You confirm the same facts. Then you go to M1. And you don't have to take all the movement, come in here, and exit only there at the very end. No, you take away the liquidity all the time. And when this liquidity is taken away, we have this consolidation, uncertainty. It is not clear whether the price will turn around or it will go higher. But, again, I can easily trade all these stories. I have setups for this history. You should not trade it, especially on M1. You should skip it all. But specifically these examples as a study, they are very cool to train your eye. And you need to understand that it will not be guaranteed to work right away. You need practice. You need to look at a lot of time, a lot of sets, so that it just gets into your head. And when it gets into your head, when you intuitively understand what the market wants, then everything will work out very easily. But for now, you just look at what I told you. You're looking for a certain foundation, and you're looking for where the price could potentially start to move like a magnet. If you have the answer to these questions, on H1, for example, then you can go to M15 and find some more detailed context there. If you want to be even more convinced that you are right, then you go to M1 and again look at the order flow to see if it confirms your hypothesis. And when you combine all this, you get a very high quality setup, which could bring you profit. That's basically it. I'm very grateful that I made it to the end of this video. Thank you again for watching this video to the end, and I'll see you in the next videos.